Okay, right. Good morning, everybody. Sorry for the slight delay. Welcome to our webinar this morning, which is all about the VAT Reverse Charge. I'm going to hand over to Anne-Marie Dunn to introduce everybody this morning. Just a couple of housekeeping points. We are recording this webinar today, so we will make this available on our website later on, so you can go over and recap on anything you might have missed. And we will have a questions and answers session at the end today. So on your Zoom toolbar, you'll see the Q&A option. If you open that up, that allows you to put any questions forward to our speakers, and we'll try and cover as many of those live at the end as we possibly can. So I'm going to hand over to Anne-Marie.
Hi, welcome everybody. I'm Anne-Marie Dunn. I'm Head of Tax Services at WMT. Today we've got Marcus Ward, who's our VAT consultant, who is going to talk to you about the VAT reverse charge and the changes coming for you. Also on the call, who can answer some of your queries, which will overlap with this, is the CIS scheme. Is quite important to understand behind this as well. So Peter Davies, our employment tax partner, is on the call.
Morning.
So if there's queries. And also we have Jane Spraggs from WMT, who heads up our Xero and our bookkeeping outsource services. So Jane can also answer any accounting queries on terms of how you do your VAT returns and things. So the four of us are here to support you. But without further ado, I'm going to screen share, so you'll have some slides to work through as Marcus talks. And hopefully we're on. Great. There we go. Over to you, Marcus.
Well, good morning, everybody. Welcome to the wonderful world of VAT. Aren't you lucky? Right. If we could go to the introduction. There we are. Anne-Marie's on the ball there. Okay, the VAT reverse charge, sometimes called the domestic reverse charge. You might see references to that in guidance and statements from HMRC, but it's more commonly known as the CIS reverse charge. This is the third time HMRC have tried to introduce it, and actually this time they have been successful. So it's live from the 1st of this month. What is it? Very basically, it is a reverse charge that applies to construction services on their own or construction services with materials. It doesn't apply to the supply of materials, building materials on their own. So this is distinction. Services on their own or services and goods. The other thing to mention at the outset is it's not an optional scheme. So if it applies, it must be used. And as always in VAT, if you don't get it right, there are penalties. So a construction business must understand and know the rules. So if you go on to the next slide, what's changing? It applies to, as I said before, construction services and similar type services, and I'll be talking about what services precisely it applies to a bit later. But it only applies to suppliers at the standard rate 20% or the reduced rate at 5%. So it has no impact on zero-rated suppliers. And again, I'll talk about the differences between those a little bit later. It applies if both the supplier and the supplier's customer are registered for CIS. So if you're not CIS, it doesn't apply. And it only applies where the customer for the services intends to make an ongoing supply of these services to another party. So it doesn't apply to end users, which I'll talk about again a little bit later. So it's typically a subcontractor working for a contractor. That's the easiest way to look at it. Also, it's important that it only applies where the supplier and the customer are not connected. And again, I'll talk about that a little bit later. So just to recap, where it doesn't apply is where the suppliers are zero rated, and an additional point where the customer is based outside the UK. So it's all, we're talking about UK suppliers here all the way through. So if we have a look at the next slide, which sets out all the suppliers that are affected. Now, I'm not going to go through all of those. It is typical building supplies, construction supplies. There's a list there for anybody that needs them. As I say, I'm not going to walk all the way through those. But if you look at the next slide, it's easier to look at suppliers that are not affected. And the ones I'd pick out there, I mean, you know, most of them are self-explanatory. They're not construction services. But the ones to point out, I think, is that not covered by the reverse charge are manufacturing, building, or engineering components or equipment, materials, plant or machinery, even if they're delivered to a construction site. So again, they are goods, so they're not covered, goods on their own. The other thing to pick out there are supplies of architects, surveyors, building, engineering, designers, landscape consultants, things like that. What we lump together as professional type services. And they're always standard rated. They're always outside the scope of the reverse charge. And again, I use the words reverse charge and self-supply. It means the same thing in that reasons, in that terms. The other thing to pick out there are installation of security alarms, burglar alarms, CCTV, things like that. They aren't covered, although you're affixing things to buildings, changing the structure of buildings, they're not covered by the scheme. So if we have a look at the next slide, which has been wonderfully anticipated by Marina, what work is zero rated? Now, common sense insists that if you're in the construction industry, you need to know what work is zero rated anyway, apart from the reverse charge. I'm not going to go into it a great deal here, but typically zero rated is a construction of new residential dwellings, relevant dwellings for things like student accommodation, things like that. That's relevant building, and some charity buildings supplied and used for charitable purposes. So again, they are things that are zero rated. They are not covered by the scheme. So that is what it is. And who does it affect? Well, mainly, as I've said before, contractors and subcontractors. That's really what it's aimed at. It may have impact on different entities within the supply chain of construction, but that's really what we talk about: CIS registered contractors and subcontractors. So if the scheme applies, the customer, in this case the contractor receiving the supply from the subby, would treat the supplier to it and buy it. So the supplier typically would normally charge the VAT, but under the reverse charge, as the name suggests, it's the customer who accounts for the VAT. And if the contractor who does it, who orders it, they account for the VAT rather than the supplier. So yeah. And Marina, if you look at a straightforward example, and of course everything in the world is as simple as this, and everything in the VAT world is simple as this. So we have John the roofer, VAT registered, and he does some roofing for his contractor Bob. I don't know who makes these names up, but there we are. And he supplies roofing materials, slates, and he does the job. The contractor, say Bob, is VAT registered as well. He's in the CIS, and he supplies those to to a developer who does the developing for the end user. Now, end user, as well as come on to later, is quite an important term. So it's important to define what that means. So that's what we've got. So how does it actually work? Well, under the old system, John the roofer would issue his invoice plus VAT. His customer Bob would pay him, well, I hope he would pay him £100,000 for the work, and the VAT at £20,000 at 20%. He would pay that over to HMRC, retain the £100,000, and Bob, the contractor, would recover the £20,000 as input tax. So everybody here is tax neutral, including HMRC, who gets the money from John and effectively gives it back to Bob. So it goes around in the circle, nice and neutral. So what happens now? Well, John, from the 1st of this month, John will give Bob an invoice for 100,000, which is the agreed fee, and he puts on his invoice the reverse charge applies. The actual wording I will come to later on invoicing. And so the contractor Bob pays the £100,000 to John, so John retains 100,000 as he would have done before, and Bob makes the reverse charge. So he charges himself the £20,000, and if he's fully taxable, he can recover the £20,000 on the same return. So it's neutral again for everybody. So that's as simple as that. And as I say, in VAT, so everything's that simple. I wish it was. So how does it work in accounting for it? Well, when John is paid, he includes the values of the sale. It's still recognised as his sale in box 6 of the VAT return. That's the value of his sale. But of course, in box 1, where VAT output tax is shown, that he won't have anything in that because the reverse charge applies, so he's not recording the sale. So in terms of cash flow, again, it's under the old rules, it's hit and miss. It could be a beneficial or disadvantaged cash flow for both of them, depending on the timing of paying and recovering the VAT and actually the payment of it. So under the new rules, of course, it's neutral for everybody immediately. So there's no advantage for VAT cash flow and no disadvantage. So that's the outcome. Now, if you look at end users, as I mentioned before, this is quite important because the old rules will still apply to end users. That's, for example, if I order an office block to use for my business and I occupy that, obviously I'm the end user. But for some contractors and subcontractors, it's not always clear. So it's important because this will determine whether the reverse charge applies or the existing system or the old system applies. So it does not apply to an end user or anybody who is non-VAT registered. As I said at the beginning, only applies to VAT registered entities. A non-business customer. So, you know, if you're supplying somebody who's not in the business of construction, it doesn't apply. Or it's a CIS registered person who's at the end of the supply chain and he doesn't supply his goods, services or the property to anybody else. And finally, intermediary suppliers who are connected. Now, that is a small point, but I've already seen it apply. So if we have a little think about what intermediary suppliers connected means, typically, and in my example I've come across already, it's going to be mainly landlords and tenants and licensees. They're quite often connected. So landlord and tenant will be the most common. But it also applies to VAT groups and things like that, which I'm not going to go into today because it's quite arcane. And if you have any doubts, just get advice on this because it can get a little bit complex. But it's just to recognise that these are the cases where it doesn't apply. So then if we have a look at the next next slide, I have suppliers in my mind. That's the downside of VAT. You think of suppliers all the time. So the importance of end users, if you go back one, Anne-Marie, as I said, these are the final link in the supply chain. So if we put another, if you go to a shop and buy a chocolate bar and eat that, you're the end user, and it's exactly the same. The end user is the person who uses the property or basically doesn't sell it on, supply it on to anybody else. Most cases, it's going to be very straightforward, but it's hugely important to establish where an end user which entity is the end user. The other point here to make, and experience so far has shown that this is an issue, the end user has to make that known to the supplier. Now, HMRC say that a supplier that doesn't use the reverse charge, issues a normal invoice, would have to have confirmation that their customer is an end user, so normal invoicing applies. And what they've suggested, or what we've seen suggested, is that the end client must confirm its status, that it is, one, VAT registered within CIS, and this is important, and in writing that the supply being made is not exempted within Article 8. Well, we won't go into that now, because we could be here all afternoon, well, until the afternoon. And the suggested wording to get confirmation that the reverse charge doesn't apply is along the lines of, we are an end user for the purposes of Section 55A, VAT Act 94, and the reverse charge for building and construction services, please issue us with a normal VAT invoice with VAT charged at the appropriate rate. We will not account for the reverse charge. So that is evidence as to why a business would issue a normal VAT invoice and not apply the reverse charge. So you have to have that in writing as evidence to support why you're issuing a standard VAT invoice. So, points to consider. Yeah, this is an accountancy thing, really, where WMT, the good folks, will help you out. Yeah, the accounting needs to recognise this clearly, and obviously by now it should be put in place. If you have any queries on this, Anne-Marie and her team surely will help you. The next point is a practical point, but I've already done it for a few clients, and that is, if you are applying the reverse charge, it may be beneficial to go on monthly returns. Now, there are advantages and disadvantages to this. The main disadvantage, you've got 12 VAT returns a year, but the advantage is, if you're applying the reverse charge, obviously you have no output tax. So that means all the input tax you claim on materials and other costs you'll be in a repayment situation. HMRC will be repaying you that. So rather than waiting 3 months or up to 4 months to get the claim, you can do it on the monthly to improve cash flow. A practical point, but some of my large construction clients have been putting in a more beneficial position. So that's an ongoing saving. The other important thing, and because we're on the cusp of it, it's just being introduced, tax points are hugely important. So what sales will the reverse charge apply to? Well, if we look at tax points, the easiest way to look at it, you will see lots of terms used and actual tax points and created tax points and things. But the easiest way in the construction industry to look at it, a tax point's created the earlier of completion of the work. If you've got ongoing construction services, you'll only have one tax point right at the end. The issue of a tax invoice creates a tax point, and receipt of payment creates a tax point. So the earliest of any of those three things, I'm counting them on my hands, so 3 things there, the earliest of those creates a tax point. Now, if the tax point's before the 1st of March, the old rules apply. If they're this month after the 1st of March going forwards, the reverse charge applies. So it's very important to analyse your actual tax points. This will also determine which VAT period it goes into, so that needs to be known anyway. But it's more important than ever to get the documentation right on this reverse charge. So you might have work that's started in January, February this year, but it still can come under the reverse charge if the tax point is after the 1st of March. So have a look at the contracts, have a look at your tax points, and make sure it goes into the right scheme. Right. Issues. Well, tax finance just talked about. Again, I can't stress how all the issues that I've come across so far, apart from whether it applies or not, it generally is tax point issues. So that's shown up to be the most important thing to look at, or the most creating the most problems. So existing contracts, again, the date of the contracts and the time it spreads over and how long the work takes is irrelevant for that. It's always the tax point. VAT schemes, just to mention here that you cannot use the cash accounting scheme with the reverse charge invoices. So if you're in the cash accounting scheme, you must get out of it as soon as possible. The strange quirk on VAT registration here is the same supplier, that the £100,000 in an example we used earlier, counts towards the turnover of both the supplier and the recipient, which is a weird thing. So if your business is not VAT registered, you still need to recognise the value of reverse charge supplies made by you. And also the recipient needs to recognise that in its turnover. So that's an odd thing, but it counts for both businesses. So it's the same supplier is counted twice for turnover. So you can't ignore it. If you're a supplier using a reverse charge, you can't say, well, I don't charge VAT on any of this, so it doesn't count towards my turnover. It does. VAT payments. Well, we mentioned going on monthly returns might be beneficial. But other than that, the VAT is neutral for all parties, as we've said, which is a good thing. I have been asked actually, and I skipped over it slightly earlier, why it's being introduced, which is a very good question actually. And I don't think it works. I don't think it does what it intends to. The fraud that it's addressing is a very unsophisticated one, where a builder issues an invoice, the recipient claims the input tax on it, but of course the builder who's issued the invoice doesn't pay the output tax, just disappears or doesn't declare it or record it at all. As I say, not very sophisticated, quite easy to get past. But so this new system does address that, I suppose. But if you're really fraudulent, you wouldn't be keeping records at all, or you wouldn't be registered, or you wouldn't be declaring it at all. And also, it doesn't affect cash transactions, which have been rife in the bit. I mean, less so now, I think. But yeah, so cash transactions are not recorded by anybody. It doesn't address that, and I think that's probably where most fraud exists. So that's really what it intends to do. So I suppose it's limited, but it does do that. And anybody who's familiar with importing goods or services from suppliers outside the UK are very familiar with reverse charges. It applies to that, and it also applies to certain other transactions like mobile telephones, where there was huge fraud involved. So yeah, it's a common theme now, and I can't help thinking that this is going to be extended to other suppliers where HMRC see fraud. We shall see. Watch this space, I think. So invoices, yeah, this is very important because VAT is a transaction-based tax. The records are very important to evidence those transactions. So if you just have a quick whiz through, all the details in the VAT regulations 1995 still apply to these invoices. I won't go through them all. There's information readily available on my website and any websites. But these are slightly different because obviously you're not going to show VAT on them as a supplier. So what does an invoice look like? Well, you have to make a note on the invoice and make it clear that the CIS reverse charge applies and that customer is required to account for the VAT. Obviously, there'll be no VAT on the invoice. And however, it won't be any VAT chargeable. It must make clear, and it's important, and by the general regulations, it's very important that how much VAT is due under the reverse charge, so your customer knows how much to apply. Obviously, you think, well, it'd be 20%, wouldn't it? But yeah, it may be 20%. It may be with the reduced rate as well. So it has to state that. The additional wording. So under the VAT Regs 95, when a customer is liable for the VAT, such a reverse charge cases as we have here, it must include the reference to the reverse charge. There's no specific legal requirement to what that wording must be, but it must exist. And some of the things HMRC recommend is reverse charge, VAT Act 94, Section 55A applies, or reverse charge customer to pay VAT to HMRC. So it must have the words reverse charge on it. And I think it makes belt and braces. It makes it more sensible just to quote the legislation, so it's quite clear to everybody, including HMRC, why there's no VAT on or output tax shown on that invoice. Yes, well, VAT penalties, great. Well, yeah, get it wrong, you get a VAT penalty and interest, and added attention from HMRC, all of which are not welcome at all. What HMRC have actually said, because the uncertainty over the introduction, I think third time lucky, because it takes time for systems to get set up and people to recognise that it might actually apply to what they do, they're going to apply a soft touch. That's what they said, a soft touch to penalties. Now, I've heard them use that phrase before, over teething problems, as they call it, and I hate to challenge what HMRC say, but I haven't seen them apply a soft touch anywhere. If there's a penalty due, they will go for it, and I think that's fair to say. There might be mitigation by pointing out to them, they said there will be teething problems, we got it wrong innocently, so there shouldn't be penalties. It's a reasonable defence, but I wouldn't trust HMRC to rely on that not to issue a penalty. CIS and in general, you've got the same issues as always exist, and WMT are very good with that, and they can help you out on that. The VAT errors, I think, are going to be mainly just simply recognising that the reverse charge applies rather than the standard invoicing system. Also, to recognise it in a business's turnover, if they should be VAT registered or not. Tax points have created problems, so make sure I get that right. And of course, generally speaking, tax points are important anyway for VAT, but doubly so when it dictates what treatment to apply, what VAT treatment to apply to a supplier. So we covered invoices. I haven't seen too many problems with invoicing. I think when people know what to do, it's quite clear what they need to do. So I haven't seen any problems with invoicing or accounting, but I'm sure there will be some. But I think once it's recognised that the reverse charge applies, that's the most important thing. The other point to make is that when you have a mixture of suppliers, some may be at 0 rate, some may be at the reduced rate, some may be at standard rate, some may be subject to the reverse charge, some not. It's important to recognise those elements of a supplier and treat them accordingly. That is one big one I have in a very big development, retail and residential, and that's been a real issue for them. But so yes, recognise each element of each supplier and don't lump them all into reverse charge when some of them don't apply. That's really all I have to say on that. The typical VAT errors, I think, apply not just to reverse charge, it's across any businesses, and I just run through them: record keeping, recording, poor systems, software and training. Typical VAT errors, not just for the reverse charges. Poor training and advice. Well, obviously, you're never going to get poor advice from WMT or me, so that you can rule that one out if you ask for advice. tax data out of date, technical errors, identifying the liability of the supplier, and again, budgets for tax compliance and poor training. I mean, they're things that, that I would flag up for any business, for any VAT issues. As I say, Anne-Marie and her team could talk about typical CIS errors. I'm sure there are a few familiar ones. So if you look at the bookkeeping, again, our experts, WMT, they're the people to ask. They know these things. So basically what I'm saying is, don't ask me. So the next steps, look at whether you should be VAT registered. Make sure you recognise all the income that should be recognised, and that's for VAT generally as well. But it's very easy to miss this on the reverse charge, because you're not looking at charging output tax. Again, if you're a contractor employing subcontractors, you must recognise the value of reverse charges when you're looking at that registration for yourself as well. That is even more easy to miss, I would say, because technically, it is supplied to and by the same entity, so you are supplying yourself. Are all sales of building and construction services within the CIS definition? As I said before, there's quite a few exclusions there, especially the exclusion for the end user. The odd thing there being your VAT treatment depends on the VAT status of your customer, which is an odd thing, but it must be recognised. Again, are your suppliers standard or zero rated or reduced rated? I mean, that's important to establish generally, but also actually it's more important for the, well, it's important for the reverse charge. It's not more important. You should always get that right. Have all zero rated suppliers been identified? Again, the same sort of thing. That should be being done anyway. And the most important, or the most easily missed thing, is the customer and end user. The other thing, accounting and invoicing, make sure that is up to the changes and can handle that. Staff that are involved, they need to recognise and understand the reverse charge amongst liabilities of VAT and tax points and things like that. Are they trained? Do they understand these things? And if they don't, what training is in place to make sure? And obviously, WMT and myself, we offer training for staff members. So that really is it. Not a lot else to say. If you've got any queries, if you've got any VAT queries, come to Anne-Marie, come to myself. We can help you. A lot of these changes, well, this change specifically has highlighted a lot of VAT issues that should have been identified anyway. It's just drawing them out of the woodwork. So yeah, so when in doubt, seek advice. That's what I would say. And to be honest, I would say that anyway. But I wouldn't I? So I hope that's been helpful.
Yeah, thank you on the VAT side there, Marcus. I'm sure there'll be some questions to come. So just a couple of final points, really, in terms of Jane's on the call. Most of the bookkeeping software has inbuilt methods to deal with this. I think, Jane, you might want to pop in and say something as well. But you might need to enable it within your software. But if you've got any questions, really, your software can cope with the reverse charge. They're set up to do so, and we can give some guidance. Jane will be able to guide you if you get stuck, but you might need to look into your software and enable it to deal with this aspect. So the next steps, there's a whole list of things there, right back, as Marcus said, to the original. Should you actually be VAT registered to start with? Will some works not in the CIS definition now fall into the reverse charge as they're linked to CIS works? Are all the sales that you're doing within the CIS definition, are they standard reduced? Marcus has been through a lot of those, the end user trying to identify that, and the training. There's lots of things that Marcus talked through. We're here to help. We've got a lot of expertise in the property, the construction sector. So on a wide range of things, we're here, can help you, not just on the VAT side of things. So I'm going to stop sharing. and go back to faces, and hopefully you can see people again. I've stopped sharing. Have we got people's faces back again?
No, it's still your screen, Anne-Marie. It's just black. It's just blue.
That's just blue. I did say stop share. There we go. Try again. There we go. Back to. Thank you. Thank you. So there's some Q&As popped in. It's the question there saying, does it apply to carpet fitter subcontractor, Marcus? Client has asked.
It won't, no. That's not construction. That's things like curtains, carpets, things like that. No, excluded.
So I was going to ask a little question of you, Marcus. So you gave the example of John and Bob the builder, and John the builder as well. Obviously, this supply chain could go on several stages. So in the example you gave, then Bob could be the subcontractor for a property developer and invoicing on again. So the whole reverse charge on the next, taking his suppliers and passing them on to the next person in the chain, the reverse charge would operate again at the next level. Is that correct?
Yeah, absolutely. The supply chain can be 4 or 5 people long, or even longer.
Exactly.
It only stops being applicable when one party is the end user.
Yep. So then the other question I think I had, looking at what you were talking about there, is that notification when the end user, ultimately, if it's construction, there will be perhaps a person buying a residential house at the end of the day, or a person who's buying a commercial building that might also be VAT registered, or may have had VAT charged on it. So when it's an end user customer, are you still recommending, what would be the wording, that sort of formality, asking them to confirm their VAT status, and the wording you used, would that still be appropriate?
Yeah, I mentioned the wording there previously. It's important that you have that evidence as a supplier, because in future VAT inspections, they're going to be looking at this, and I strongly suspect that they will be looking at a lot of people in the construction industry because of these changes. You have to have evidence in a statement form that confirms that the end user is exactly that, the end user. So any documentary evidence, there's suggested wording, as I said earlier, but as long as they confirm that they are the end user and that they want a standard tax invoice.
Okay. So somebody has popped a question up saying, could you explain again why people would choose to go to monthly VAT returns?
Yeah, it's purely cash flow. Because under the old scheme, pre-1st of March, as a subcontractor, and John in the example, you would be having declaring output tax, which will be offset by your VAT on your costs. Obviously, since the reverse charge, there's no output tax in your VAT returns, you're being a repayment situation. So all your VAT returns will be requesting a repayment from HMRC, a so-called repayment trader, as they call them. So rather than saving up all these claims to the end of the quarter and then a month after that and then waiting for the payment, could be up to 5 months, you can do it on a monthly basis to get the VAT back earlier, to improve cash flow.
So then there's another question. Do the rules affect landscape gardeners?
No. If you look at the exceptions we said on the slides, that was one of the examples given, that landscape people, consultants, and no, it doesn't apply to them.
Yeah, and then somebody else has asked, is there a compulsion for the end user to have to give you written confirmation? I mean, obviously you need to ask for it and make your best view, but can you compel them to?
Yeah, I mean, this is one thing that we've found. The rules might change, but as they are, there's no formal requirement or legal requirement for an end user to declare that they're an end user. Now, it might be beneficial for some end users not to say that. And so to get it under the reverse charge, and there's nothing to stop them doing that as the rules are at the moment. It might be an anomaly, I can't say that word. It might be something that HMRC may look at in the future, but there's no legal requirement to say you're an end user, even if you are. So it might be beneficial not to issue a certificate or a statement, or or anything, any written confirmation, and so you receive the supply via reverse charge, and you can do it yourself. There may be reasons why people want to do that, and they have, and they are doing it. And I know HMRC are aware of this. So whether it continues remains to be seen. I suspect they might tweak it so that it is a legal requirement to make that formal announcement.
Great. I think that may be all our questions that we've got. If anybody else there has got a question they want to pop into the Q&A and chat box, that would be great. And that can be anything from the accounting systems to the SIS or the VAT. So that was very helpful, Marcus. We'll make the slides available to people who've attended, and as Joe said, this is recorded as well, so people can have a listen back, and we can provide some more detail on some of the areas if people need that. So if there's no further questions, let me just see. There might be another question just popped in now. Is it possible? Is there some model invoices with correct wording, an example of a properly formatted invoice with correct wording? Is it possible to provide a model invoice to people with that wording on?
It is. If anybody wants to contact me, I can supply that to them. No problem.
Great. Joe, have you got anything else that we need to do from an administrative point of view if there's no further questions from attendees?
No, those are all the questions answered live. Thank you very much. Again, thank you to all of our panelists today for joining the webinar. Thank you to Marcus, especially for your presentation. That was very helpful. As I mentioned earlier, when we first joined, this recording will be available on the WMT website later on today at wmtllp.com. And all that remains for me to say is thank you very much for attending, and we look forward to our next one. Thank you.
Thank you.